Well, hi everyone, and a very warm welcome to this Panalitix webinar. It's June the 10th, 2020, and I hope you are getting settled. If it's lunchtime, I hope you have a bite to eat, but you also have, you're not too distracted. Turn your email off, turn your other distractions off, and let's have some fun and learn some stuff in the next 50 to 60 minutes on this question of successful businesses. Businesses which will emerge now and how we in the accounting profession can support and advise them. That's what we're here to discuss today. And many of you are very familiar with the systems we use. Zoom, you can input questions in the box there, which you'll find on the right-hand side of your screen. You're welcome to do that. I don't promise to get to every question today, but I will respond to everything that's asked of us, and we will record this webinar. So if you have friends, family, acquaintances, colleagues that you'd like to share this with, please do so. And yeah, so we're talking about this interesting idea that in these very fascinating times, and some would say challenging times, there are going to be businesses which are going to emerge with immense success, and that presents an opportunity for accountants to support them as they drive for that success. But we've got to identify them first. These are some of the issues that we're going to be discussing today. I'm Mark Ferris. I've been with Panalitix around 3 years now, and I have a career advising companies in different guises. First in the IT software industry, JP Morgan, Morgan Stanley, Credit Suisse, they were some of our clients. Later in market research and marketing analytics, Unilever, Procter & Gamble. And then later in procurement software, Caterpillar, Boeing, and some other large multinationals. I've made most of the mistakes you can possibly make as an advisor, so I hope I can share a little bit of insights, but I'm certainly have a lot to learn, and will enjoy getting through this session with you today. So let's get straight into it. There's 4 things that I'd like to discuss today. A little bit of background on this topic and why it's important, and then a little bit of those success stories which we might be able to identify. And then most importantly, this advisory framework, because we feel very strongly in Panalitix that if we can create a framework for accountants, they can add a lot of value as advisors going forward. And that's really the key issue today. You know, I always set the target that if you do one thing differently after this webinar, 1 or 2 or maybe even 3 things differently, or even think differently about the same topic, then I think we've made some progress and it's justified your investment of time. And then a couple of resources which may help you on your journeys as advisors, right? So I'm delighted, by the way, we have a very large attendance today, and I see right across New Zealand, both of the islands, North and South, and then right across Australia, WA to Queensland. It's rainy day in Queensland, so it's a good day to be watching a webinar. Let's get into this. And a quick word about Panalitix. You know, we exist to help accountants build advisory businesses. We think this is important. We think that in so doing, they will help their clients. And if their clients succeed better, that's good for all of us. It's good for the economy. It's good for the accountants. It's good for everyone, right? So we think that that's an honorable and noble goal that we have. And we've developed some applications. We have our own capabilities as advisors, and we have a whole lot of content that we can share. But what I want to focus on here is our underlying philosophy that relates to advisory services, because I know that you as accountants are hit up every day by clients saying, hey guys, you need to be advisors. If you don't, the world will end, and we've got the perfect bit of software or methodology or coaching philosophy that'll get you there, right? And frankly, this is not new. We've been talking about this in the profession for an awful long time, right? And it's time to get really clear on what this is about. So here are some assumptions which we apply in Panalitix. The first is that accountants are accomplished, smart, mostly talented people, but this is about learning new skills. Because of what you've done in the past, it doesn't necessarily mean that you're already equipped to be advisors. We have to develop a new skill set, right? And that's kind of obvious because traditionally accountants have been very involved in the processing of data. They move data around and sometimes add value to it so that it can be presented in the required format, whether that's for compliance reasons or management accounting reasons. But that's different from providing advice. Advice is a different set of skills, right? And therefore, this isn't about a magic wand, a magic bullet, one particular software tool or one particular methodology that makes you into an advisor. If you give your general practitioner, your doctor, a scalpel, he doesn't become a surgeon. There's a lot more to it than that, right? And in fact, what is it about? It's about understanding the context, the background of business, right? And being able to express that in the language of business. This is the skill that we feel is so critical on the journey to building advisory services into your business. It's also about relevance. It's, you know, would you ask advice on something that doesn't really matter to you, on something that's trivial, on something that's meaningless? Of course not. You ask advice on something that's important to you, something that figuratively keeps you awake at night. And so we need to identify those issues with our clients that keep them awake at night if we are to properly advise them. And, you know, I think what holds a lot of accountants back is a lack of confidence, because why should you be naturally good at this, right? Why should you naturally step up and walk into the shoes of advisors? Well, we need to build the confidence so that you can look any client in the eye with authority and know that you can advise them. And then we build credibility. You know, if you've been running a practice which is entirely compliance driven for a long time, you need to persuade people that you have the capabilities as an advisor to help them. And that takes time. It takes marketing, communications, public relations. It takes a certain behavior. It takes a certain demeanor. That's how we build credibility. And, you know, it's also about humanity, because if you want to be in the automation business, go and join a software company, right? That's what software is. It automates processes, right? But advice, the rendering of advice, is a very human condition. It's about understanding other humans on a very visceral level. And therefore, your skills as human beings is what's in question here. And most importantly, I feel, you know, I talk to dozens and dozens of accountants each week, and many of them say, we want to be business advisors, right? But I think, honestly, some of them don't, right? There isn't the underlying desire that makes them willing to take on the transformation, which we're talking about here, right? So some of this language is going to come through in this presentation, because we feel strongly that this is the basis of building advisory businesses. Now, here's the good news, right? The good news is that there are huge opportunities for businesses which can embrace an advisory philosophy which leverages all of these things which you're looking at on the screen there, right? There's huge opportunity. And we think that those opportunities are actually enhanced in this interesting business environment that we're in now, right? So that's a moment about Panalitix and our philosophy on this really important topic. I'd like to get into the next phase, which is success stories. You know, there's not a lot of success being talked about right now in the general news. So I'd like to focus a little bit on that. We need some of this, right? And I did a bit of research on businesses that have been born in the most dire recessionary and adverse business environments in history, right? And, you know, we think many people would say times are awful now for a whole lot of reasons, but you look back in history and you see that they've been a lot worse for a lot of people on a lot of occasions, right? I think back to what I read about General Electric, right? In those days, they called recessions sometimes panics, right? And this was a 2-year panic when Thomas Edison founded General Electric, right? And they had a very humble beginning, but 7 or 8 years later, they were one of the first companies admitted to the Dow Index, right? And of course, they went on to be one of the most successful organizations of all time. General Motors, its predecessor, was actually in the horse-drawn carriage game. And then in 1907, in the height of another recession, they acquired Buick, the automotive manufacturer. Very risky, but they went on to be one of the largest companies of all time and held that ranking for a long time. IBM, this was a 2-year panic. Panic seemed to be longer in those days. 1911 they were founded, and business machines. Why would you need a machine in business, right? Was the common thinking. And it was a deep recession when they started their business. And then what about this? Imagine the Disney brothers in 1929 in the midst of the Great Depression, right? And they're sitting there saying, hey, but we know how to do animation software, and we've come up with this concept called Steamboat Willie, go figure. And this was the basis upon which they were telling people that animation could be in the future lexicon of entertainment, right? And well, were they right? It was only a few years later that they did their first full-length motion picture in animation, Snow White and the Seven Dwarves, right? And the rest we know. Hewlett-Packard, would you like to be starting a business in 1939? I mean, what can possibly go wrong in the world in 1939, right? Well, by the way, it wasn't just the future 6 years, but it was that we'd had the biggest GDP decline in the 20th century, 19% decline in GDP, right? And that's when Hewlett-Packard started their business, which became successful. We could go on and on and on looking at companies that were born in the depths of these recessions. By the way, I'm using here a strict definition of recession being 2 consecutive quarters of negative GDP growth, right? But if we actually broaden the definition slightly, we see a whole bunch of companies that were born at times which were really, really tough. Google and Salesforce as tech companies being born just before the dramatic bursting of the dot-com bubble in 2000. Facebook before the Great Recession or global financial crisis, 2004, right? So things were not easy, even if you weren't actually founded inside a recession. Now you might say, well, yeah, but those are all kind of big companies, US-centric, major industrial players, and it all happened quite a long time ago. You know, I'm talking to accountants about their clients now, and there's all sorts of innovations and boldness and transformations being undertaken by their clients. A couple of examples here. The store which serves the great bakery products out of 7 locations now saying, well, if we can't sell these things, let's get people to make them at home and equip them to do that, right? Restaurants getting into veg delivery. All of the gyms have shut down. This one is not only providing online classes, but also selling products. A few gyms are doing that kind of thing. I had to look up what eyebrow threading means because I didn't know. Sorry about that. But this particular resource, this business has not only provided these implements in the form of home kits, but they've also gone and created educational materials to help people get this stuff done at home, right? Client in Melbourne is repurposing part of their factory to get into the hand sanitizer business. Reminds me of Dyson in the UK jumping on the opportunity to build ventilators, right? And then drive-through. Drive-through is more complex than it sounds, right? What can be harder? People come and pick up stuff, but you've got to build them, you've got to quality control, you've got to package and all this. And there's a company actually on the Gold Coast that's become quite equipped to do this. Maybe there's a GE, a General Electric, a Disney, a Hewlett-Packard among this list, who knows? But at least there's innovation and boldness. And my guess is you have a lot of instances of this in your clients as well. Because if we don't get bold and innovate, what is the alternative? Pulling out some of the ideas which emerge from this analysis, right? The things which drive the success of these businesses in chaotic conditions, right? Here are a couple of ideas, and I don't think this list is exhaustive. It's just some ideas for us to think about here. But, you know, the need to think long-term, and as the head of this payment business, Credit Karma, founded in 2018, but hugely successful now, says, you know, frankly, you need to think long-term because you simply cannot control what's going to happen in the short term during these chaotic times. So if you have clients who are thinking out a year, 3 years, 5 years, that's probably the beginnings of a good strategy. And then there's the old market understanding, knowing what customers want and what customers will buy. You may recall Groupon also founded right in the midst, and they had all sorts of plans which didn't look like this, which didn't look like performance-based marketing solutions to connect businesses and brands with their customers. And they innovated in that field and really changed an industry, but it was born out of the chaos of 2008, right? and then simply taking action, getting moving, doing stuff. Many of you are familiar with Slack, also born in the 2009-8 crisis, right? And enjoying the best period in their history right now. The current CEO modestly said the other day, well, the macro environment is creating significant tailwinds for the business. They've added 9,000 users in the first quarter of this year, but they've actually been very, very active in business development during this period because they sensed opportunity and they seized the day, right? And then there's the ability to be agile and turn your plans completely on their head. MailChimp, although it was formed in 2003, when they got into the midst of the crisis of 2007, 2008, all they had was a bunch of corporate users paying an annual fee. And they decided bravely to add a freemium business in 2009. And the board said, that makes no sense. Freemium means free. How do we make money out of that, right? Well, their users grew in 1 year considerably. And that made them one of the most powerful modern technology businesses. So a couple of ideas there on what might drive the success of your clients going forward and ways in which you can have conversations with them to highlight these kinds of ideas. I'd like to move to the next part now, which is the main substance of what we're discussing today, the advisory framework. And I'd like to ask you to do a little work at this point, if you don't mind. We're going to talk attributes in a second, and I'm going to ask you to choose one attribute from the following list which you would most like your ideal clients to have. Your ideal clients must have this attribute, right? I'm going to present a list which includes the size. Maybe you want businesses to be of a particular size, very big, perhaps, or they must be in a certain industry to be your ideal client, or they must be at a certain stage of development. Startups, mature, declining. You might be an insolvency practitioner, right? Or maybe it must be that they're growing. Growing businesses are who you want to work with as opposed to stagnating businesses. Maybe it's about how easy they are to work with, right? Now, I know there are multiple of these you could choose, and there's a bunch of others, but I just want you to pick one because we're doing an exercise here, which is going to take us to the next phase of this discussion. So pick one, please. Let's open the polling here. Thanks, Jono, and get people to pick one of those things which you would like to define your ideal clients. Which attribute would you like them to have mostly, right? And this looks like an active group. Appreciate your input. I know that you're saying, well, it's a bit of this and a bit of that, and there's other things that are not on this list. I accept that, but it's fascinating what you're coming up with here. I did this in Europe last night, and okay, I'm going to give you another 3 or 4 seconds there. Just choose one. Don't overthink it. Okay, we're looking like almost a dead heat, and 3 more seconds. 3, 2, 1. Thank you. Enthusiastic group. Okay, we almost had a dead heat between easy to work with, which was the slight winner, 44%, and growing, 39%, right? Those were the 2 outright winners. There was a couple on every other one, size, industry, and stage. But what this is telling me is that you are thinking in terms of the attributes of the clients that you have. There's a structure, and let's talk more about that. Thank you for participating, because I'm now going to get to this place where right, the advisory framework. Okay, here we go. Now, business attributes. This is how I think we might think of the way we do advisory work in the future. At the base is the attributes of the business. And then we need to understand the market in which these customers operate, our clients operate, right? What is the ecosystem in which they operate? And then why do they exist? The vision and purpose. We feel this is important to understand if we're to properly advise clients. And then the goals that they've set, because these goals help them to accomplish that vision and purpose, right? Then they make plans to try and achieve those goals. You got to do stuff. In business, we have to get out and actually do things in order to accomplish the goals so we can meet our vision, right? And finally, we've got to measure what we are doing. We've got to be accountable to the plans we set. So what we're going to talk about in the next 20 minutes or so are the different pieces of this puzzle. And I hope it's going to create some kind of framework in which you can view your clients going forward. Let's go back to business attributes firstly, right? And I'm going to give you a list of questions I like to ask. And I hope some of these will be questions that you can ask some of your clients to better understand them. And when we wrote up this webinar, we said we're going to suggest some opportunities that accountants might be able to find. So I'm going to list some of those out as well. Here's the first question. By the way, these are not in any particular order. You don't have to ask these in order. Some will be irrelevant to some of your clients. Some will be redundant, right? But I like to understand the ownership of any business. I like to understand whether the owners are an individual or individuals, whether it's family owned. I want to understand what stage of the careers those owners are at. Are they older, younger, mid-career? I want to know about their reputation. I want to know what portion of their wealth this particular business constitutes. Are they completely invested in this business, or is it one piece of their portfolio? I want to know if they have partners, if they're financial investors or strategic investors. I want to know if they're the people running the business, right? Because the more I understand about that, the more I can help them. And so when I look at the work our clients are doing that relates to this, I can see all kinds of opportunities. Obviously, it's going to depend on that ownership structure, but planning around tax and succession and asset protection are obvious places to start there. And maybe reporting to external shareholders. One of our accounting clients works for a number of startups, and part of their job is to ensure that the financials of the business are properly protected, presented to the venture capitalists who are invested in those businesses, right? So that's a question I'm very intent on understanding. The next thing is the stage of the business, because you may deal with some clients who are actually pre-startup. They haven't yet even been formed, and then they get started, right? Then hopefully they grow. They might not. They may start a decline early on, and then they mature where growth is more difficult, right? And then most businesses will get at some point into a declining state where they may be acquired or they may liquidate or something. So there's different stages. And I really like to understand where businesses are at, because their needs are fundamentally different, right? And if their needs are different, then there are opportunities for accountants to step in and add value in those different phases. There are some examples there, and we're dealing with an accountant now who is managing the exit process for some founders of a business who are raising their third round of capital, and there's an important role for the accountants to play in that. Size, how big is the business, right? Because logically, a larger business will typically have more complexity. Not necessarily the case, but more employees, more facilities, more products, more customers, and typically more revenue. So what can we do with a business that's bigger? Sometimes it comes down to compliance. A larger business will have to comply with a greater set of regulations depending on their structure. We have an accountant based in Sydney, which is commissioned to build cash reserve policies for a business which is planning to list in the next year, an IPO, and they are intent on managing cash reserves better and having investment policies, etc. Right? The next question, what exactly do you sell? What are your products? Right? Can you answer this for all of your clients simply, right? Some of your clients will have just one single product. Some will have a few. Some will have a hybrid of products and services, right? But this invites an opportunity for accountants to understand the product portfolio by profit, and maybe we can drill into the different categories of product to see what they are delivering to the organization in the past, but also in the future. Accountants are often thinking about launching new products, new advisory products, right? What will those deliver to the business in terms of return on investment, right? So these are some opportunities for accountants. This list continues because we need to understand how our clients make money. That's the inelegant way of talking about the business model, right? Some people make things and sell it. Some people buy things and sell them at a premium. Some people license bits of technology or other intellectual property. There's a whole bunch of business models we can discuss, but we often see, particularly in this environment, Remember all those businesses we talked about, success stories? They are actually evolving their business models. If you used to sell services to people who came to do yoga, but now you're selling them yoga mats, that's a change in business model. You have to understand procurement and inventory and delivery and markups and pricing in a whole different way, right? So accountants have the opportunity to help people with feasibility of different business models. Next question. Most of the clients you work with are not independent out there. They may have some sort of affiliations, trusts. They may be part of a group. They may have subsidiaries, right? And over time, those structures and affiliations will evolve through acquisitions, divestitures, right? There could be mergers. Some businesses will go out of business, be liquidated, right? But every one of those provides an opportunity for accountants to add value in the process, right? And then there's the final question around geography. I know a lot of you are serving the subsidiaries of foreign-based clients that have an operation here in Australia or New Zealand, right? There are issues around taxation, around transfer pricing, and other compliance related things which we should consider. One of the accountants we work with in Western Australia, they have a client that has 5 offices located across Western Australia in the farming areas, and they're thinking of shutting down the offices and trying to have everyone work remotely. And the accountant is doing some work on the financial implications of that and the project management around that, right? So these are business attributes. I say this list is not exhaustive, nor is it in sequence, but I think if we understand this about our clients, we are beginning to set the framework for robust advice. Let's talk then about the market. And I'd love to talk about this for another 7 hours, but I'm not going to because we don't have that time. I'm going to distill this down just to 3 simple questions, super simple questions, right? Which we should ask of our clients all the time. Who is your customer, right? What do they look like, right? How big are they? Where are they located? How frequently do they buy from you? How do they pay for it, right? We want to understand everything about them, right? Because then we can help our clients to classify their customers, right? That's valuable because we can understand which segments are providing the most profitable customer relationships, right? We can understand the impact of price. We can understand elasticity in the market. We can help them plan future product offerings to exploit the opportunities among the customer base, right? So these are opportunities which arise for clients, for accountants in the context of understanding the customer. Why do those customers buy from you? What needs are they trying to satisfy, right? And this is around needs analysis, but particularly segmentation. If accountants can shine a light into the different segments of the customer base, that can be extraordinarily valuable, right? And then remember, the market is not just about your clients and their customers, it's also about their competitors, right? So if we can help them understand the competition, we can help find opportunities in that market, right? Or have defensive strategies, right? Imagine if the number of accountants in your region doubled tomorrow. What would happen? Would it matter? What if the number halved? Would that matter? Would it change anything, right? This is about market fragmentation. And if we can model the outcomes of those kinds of changes, we're adding a lot of value. Don't even try to read this, right? This is a Panalitix tool called Market Decoder. Some of you have used it. Some of you have seen it before, but I just want to illustrate something quickly. Down the left-hand side, we have some ideas which your clients might need from their accountants, right? Technical ability, likability, quick responsiveness, proactivity, understanding how to improve a business, understanding how to create wealth in a business, etc. These are things which clients tell accountants that they need, right? And if we were doing this work for your client, we would provide some scores across those needs that we identified before. And we would compare your scores to those of the competition, right? It could be a number of other firms that look like you. It could be the internal CFO at one of your clients who to some degree competes with you for work, right? And we can total up your score and your ranking in this market, right? And we can see where you are relative to the market leader in terms of the perception of adding value to this customer base. And most importantly, you can see where there are gaps and where you can improve in these particular needs, right? So this is a activity we're doing with clients, but also our accounting clients are doing with some of their customers to add value in the area of the market understanding, right? Okay, thanks for your attention as we go through this advisory framework, business attributes, the market. What about the vision and purpose? Why are we even doing all this stuff, right? Don't we need to understand what's driving the owners or the leadership of a business in order to properly render advice, right? So here are some key questions. You know, in this interesting time, we find that some business owners are demotivated. We also find that some are incredibly excited. But when we find demotivation, right, we have to ask the question, is this really what you want to be doing right now? Because it's not obvious that people are doing what they ought to be doing, right? And if there are choices there, which choices are there and which is the best choice for them to take? As an advisor, you cannot find software to model and figure out the answers to these kinds of questions, right? We have to think, we have to use our minds, we have to use our humanity to get to the answers to these kinds of questions. But for those who are enthusiastic, we can talk about what success might look like in the future, right? Now we're talking vision. Now we're talking aspirations. Now we're talking drive and desire. We should understand that for our clients because we can play a part in helping them to get there. You know, when we do these webinars, we invite people to ask questions in advance, right? And it's really fascinating, the questions and comments we get. I want to share one with you. In fact, I'm going to share two, right? This came from an accountant based in the United States. And I'll read it to you. It says, "Why bother? It seems all too hard and clients are reluctant to pay us for our services. We are underpaid and stressed out." Now, what do you take out of that statement, right? What do you learn from that? What demeanor do you think this person has, right? Is it a positive one, right? I don't want to beat up on anyone here, but this is telling me that this guy's either had a bad day or they are despondent about where they are right now. What does that mean? It could mean just a fleeting thing, but it alerts me as an advisor. It makes me alert to trying to understand the causes and the consequences of this, right? Here's another one we got, completely different. How to take advantage in these uncertain times, planning for growth, how to generate proposals quickly. What does that tell me about this client? It's very obvious. I don't have to labor the point that the underlying motive and substance behind these statements is quite different, right? And as an advisor, I want to be sensitized to these because if I understand it, I can do a better job of helping clients, right? Vision and purpose. Let's move to goals. Okay, goals. In Panalitix, having looked at many accounting businesses and their clients, we tend to resolve goals into 6 areas. And some of these are very obvious, right? But if I don't understand the goals of a client, how can I possibly begin to advise them, right? So, you know, when people say, oh yeah, I want to double the revenue, I want to grow the revenue by 10%, 30%, whatever it is, what's the first question we should ask? What's the first question we should ask when they say that, right? Pause. I think it's why? Why would you want to do that, right? Is it obvious, right? Here are some ideas why. Right, here are some ideas. It could be a very noble thing to do. Is it because bigger is better in your industry? You'll attract a better set of clients, employees, maybe investors. Is it egotistically driven? Nothing wrong with that, by the way. It's not a judgment. Our job is not to judge as advisors. Our job is to provide advice, right? But reputational and ego drivers are not uncommon, right? Maybe it's to get that money to flow through for distributions to owners. Whatever it is, what are the targets exactly by product, by territory, and who's going to get this done, right? You or your teams, right? And then how are we going to get this done? You know, we often find clients saying, well, last year we grew by 5%, I want to grow by 3% because we had COVID. That's not good enough. We need to understand the dynamics which underpin revenue growth, right? Leads, sales conversion, etc., right? So we'll often find that this is a goal, but we need to scrutinize it. That's our job as advisors, not just to accept it. Some people say, I want to grow profit. And what's the first question we ask? the first question we ask is, why, right? Here are some ideas, right? It might be that that implies there's more money to invest in the ongoing growth of the business. It could be distribution to the owners. That's absolutely fine. Buy a house, buy a boat. It could be because the business is being positioned for sale and we want to increase the valuation, which will be a multiple of EBITDA or profit or something like that, right? And how are we going to measure our pathway to this? These are the questions we need to ask around profitability. What are some other goals? Efficiency and capacity, right? The way in which we use our assets wisely to generate the best returns. Well, again, we ask the question, why is that important to you? What are you trying to accomplish? Now, I'm a bit nervous to put this next list out because some of you will get really excited because of the familiarity, right? Look at that list of metrics in a business, right? All these ratios, expense to revenue ratio, revenue per employee, the cash flow ratios, right? Cash on hand, operating cash flow, free cash flow. Why am I nervous about this? Why am I nervous? I'll tell you why I'm nervous. Because I often see accountants starting their advisory conversation here. They go to a client and say, hey, I've done some work on your working capital cycles and I think we can improve. Now, look, I'm not saying these are unimportant at all. They're critically important, but they have to be seen in the context, in the framework. There's a danger your client at that point will say, well, A, I don't really understand what you're talking about. B, I'm not sure why I need it. And C, I've got to go out and sell a whole bunch more. And 5 of my employees are threatening to leave. And that's what my problem is right now, right? So you're not speaking to them in a way that's relevant. Okay, so while these are very important, let's make sure that they are kept in context. What about lifestyle? It's quite reasonable to have lifestyle goals, but we should ask why again. And the common answers we get, which are perfectly legitimate. I want to work less. I've been doing this for 30 years. I've been working 50 hours a week and I now want to quieten down a bit, right? Or I want to work differently. I don't necessarily want to work less. I want to do less sales or more sales, less management or more management, less administration or more administration, etc. Right? Now, if we can understand that, we can build businesses. We can help our clients build businesses which support the achievement of that goal. What can be more critical than helping your clients to achieve the lifestyles they want to achieve, right? A couple more goals here, right? Succession. Okay, every business will undergo a succession event at some point. It's just a matter of time. If you go back to GE, General Electric, it's one of the businesses which maintained the same corporate structure for as long as any other business in history, right? That's the exception. Most businesses will undergo some kind of succession every 5, 7, 10 years on average, right? So again, we want to ask why you're thinking about succession. Mostly people will say, I'm not thinking about succession. It's irrelevant to me now. But many of those people have succession thrust upon them when they least expect it. And that's an unfortunate set of events. So lots of opportunities for accountants to play a role in this by understanding what structure that succession might take, right? Because we can add a lot of value into enabling that, right? And then finally, on goals, community. Some of your clients will want to impact the community around them. Why? Right? It could be for what we used to call corporate social responsibility, right? To drive some kind of purpose in their community. But it could also be a part of business development. We can gain leads and customers by philanthropy, charity, chambers of commerce, participation in business groups, etc. Right? So let's be sure we understand that, right? Okay, so some goals there. Now, goals should be set within a particular time frame. They should be relative to the competencies of the business, right? If your client says, I want to be $1 billion corporation, but they've spent the last 30 years as a $400,000 corporation, they may not have the competency or the resources to get to that point. And we have to challenge their assumptions. We also have an opportunity to keep them accountable. But remember, these goals are not all of equal importance, right? Some are relatively more important than others, which is an opportunity for me to refer you to Panalitix's Strategize product. I did this just 10 days ago with an accountant based in Western Australia. They've had an offer to buy their firm dollar for dollar, with 33% paid at the end of this year, 33% next year, 33% the following year. And so they are very focused in terms of goals now on a couple of things, right? Succession, 35 or just over a third of the allocation of chips here is around succession. That's where they want to focus, right? They need to prepare for this potential transaction. And the other big driver for them is profit, because the business the valuation will be influenced by the profitability of the business, right? So this is where they are focusing, and we're planning how they are going to accomplish stellar achievements in those two particular areas, right? So we've looked at some goal setting as in the context of being business advisors. Let's look at planning now, because we've now got to go and do stuff. It would be nice if we could go home after setting our goals, but we've actually got to go and execute upon those goals, right? So, you know, the challenge we have in business is there is so much to do. There's so many different things. And what we need to focus on is the business drivers, the things which have the biggest impact and help us to accomplish those goals we talked about right now. These regrettably don't leap out of the P&L or the balance sheet or the income statement, right? When you present those to your client doesn't say, oh, well, I understand my business drivers now, right? They don't say that ever, do they? Right? We have to find them elsewhere. And remember that what we said at the beginning about relevance and doing things for our clients which actually matter to them, right? So when we talk business drivers, we're talking about the things they worry about. Am I selling enough, right? Am I retaining my customers enough? Are my costs at a manageable level, right? And just like everything else, not all drivers are equally important, right? So we've really got to focus down on the ones that are going to deliver the biggest impact in our business. In Panalitix, the methodologies we use revolve around the idea that every business needs to generate new opportunities or leads, right? And they also want to convert those leads into sales, because that's where we derive revenue. And when we do that, we want to convert those leads into sales at a rate which delivers the biggest impact into the business. That's revenue per customer, right? And a lot of that is around pricing strategy, right? And then particularly for businesses which have a repeat purchase or an upselling or cross-selling opportunity, we want to retain our customers for the longest possible time, because it's expensive to acquire a customer, right? And then if we can deliver our products at the lowest possible cost, that helps. And if we can reduce expenses across the general expense of the business, that also helps, right? So these are some of the drivers. I wonder, as you look at that list, I wonder if you could choose one of them and you could quadruple the performance of it, which one would you choose to bring the biggest impact of your business? Imagine if you could say that definitively to every one of your clients. Let me briefly mention growth equation, a Panalitix tool. Those are the drivers that I've just run through there, right? Revenue per existing customer, churn or retention rates, lead generation, etc., right? So this particular business is telling us about the current performance on those drivers. So here, the revenue per existing customer in any given year is around $5,000 on average, right? That could be a large range. Some are paying $2,000, some are paying $10,000, but the average is $5,000. And they're losing 1 in every 10 clients on a per annum basis, right? And they're generating about 3 leads a month or 36 leads in the year. That's how they're performing currently. But what is the potential in the business? This is where you and your client can work out, based on historical, but also on business modeling, what you could potentially achieve in any one of these drivers. And here we're seeing actually an increase in the revenue per existing client to $1,000, by $1,000 to $6,000, and a reduction in churn from 10% down to 8%, etc., right? So what does that mean? It enables us to produce something like this, where we're focused here on revenue growth. This particular client, they might be focused on driving their profit up or the valuation of the business, but here we're focused on revenue. And there are those same drivers that we've been discussing, right? These are important in any business. But most importantly, if you look on the other side here, we can see that there's a possible 31% increase in revenue achievable if we focus on revenue per existing customer, increasing that, right? And the business owner has told you that that's possible. So now how do we go and do that? And we have resources to help them, right? But 18% increase in revenue if we focus on improved sales conversion, right? So this is where you can advise your customers and not to do some of the things which are not going to drive a lot of increased revenue, like lead generation. Don't bother. It's not going to make a difference. Don't go and spend money on marketing to generate leads, because ultimately you're not going to achieve the revenue growth that you want. So this is a quick snapshot of a Panalitix tool which helps with this idea of planning and prioritizing in a business, right? Okay, doing well here on time. I'm going to ask you to participate in the second poll, please. Now, this one is about accountability, because that's what we're going to discuss next. And what I'm really getting at here is, you know, a lot of you know what to do in your business. You know what to do, but there's a lack of accountability. So you're not getting everything done that you might do. It could be because of structure or process or policy or management. There's a whole lot of reasons, but there's a lack of accountability, which is preventing you from doing everything that you want to get done right now. To what extent does that occur in your business? Some of you will say, nope, we get everything done. We plan and we get absolutely everything done on time and absolutely to spec. We need no change in our business in this regard, right? Some of you will say, nah, we get most things done. We don't have many lingering things that we all, but there is room for improvement somewhere, better process, better structures, better communication, right? And some people will say, actually, we could do quite a lot better here. There's a need for more structure and improvement here, and it's more significant. And some of you will say, honestly, this is an area of weakness. We actually know exactly what we should be doing, but we're slow, we're delayed, we're late, and this is actually holding us back in the business. Please pick an A, a B, a C, or a D in regard to accountability. To what extent are you succeeding with your business challenges because you hold yourselves accountable and you get things done? It's quite a tricky question, isn't it? Right? But give it a little bit of time to distill. And we're seeing another enthusiastic response. Thank you very much. Thank you very much. Okay. And quite a lot of honesty, because some of you are obviously less than enthusiastic about your performance in this area. Okay, I'm going to give this another couple of seconds before we wrap up our time today. There is a clear winner emerging though, right? Let's give this another 3 to 5 seconds. 3, 2, 1, done. Okay, congratulations to B. That's the winner. There's room for improvement, right? It's double the next option, which is C. So everyone is saying there's room for improvement. We can be more disciplined and accountable in our business, right? And I think that's absolutely reasonable. The next highest was C. We could actually do quite a lot better. There's a couple of you that said, this is really holding us back. We're weak here. Thank you for your honesty. No one will ever know who you are, by the way. And nobody said we've got everything done. We're perfect in this regard. And that's probably a very reasonable outcome. Thank you for your participation. B is the winner. Let's move to our final segment here. Okay, because we're going to talk accountability, right? And, you know, I feel this is an underutilized advisory opportunity for accountants. You know, what shapes can accountability take? I was talking to a client last week who said that with one of their clients, they meet for lunch on the third Thursday of, no, they used to meet for lunch when we used to do lunches. Do you remember those things? We used to actually go out to a place and talk to each other and buy a meal. Well, ancient history, I know, but they were doing that every third Thursday of the month. And it was a fairly informal check-in, no kind of agenda, but it was an opportunity to share ideas, right? That can, of course, be much more formal. I think it's important to think about what you call accountability, right? I know clients that call it an accountability program. That's what it is. It's very much about keeping the client accountable to their plans, but there are other words, mentoring. It could be more of a board structure, informal or formal board structure. I like the ones that call it a name, like a health check, right? It could be the ABC health check, your firm name, right? But then it takes on a kind of structure and a shape beyond just getting together to talk about things, right? And then it could be a planning session because it comes at the end of the year or the end of the quarter or whatever it is. There is an issue around frequency. The more frequently, the more you can get paid, I guess. But can you add as much value depending on the frequency? And creating some kind of agenda is generally important. What are you going to prepare prior to this, right? Because if we have an agenda, we want to deliver value, we probably need to review things and track progress against those plans we talked about in a way that's relevant to the client, right? And what are you going to ask the client to prepare? Because I believe that advisory relationships are very much two-way. This is not about you dancing for the satisfaction of the client. This is about, it's a mature relationship which is reciprocal, and it only works if there's investment on both sides, right? So I think the client should also participate in this. That's a quick word on accountability. You know, we talked about building credibility. A lot of that comes from communicating. Being a business advisor is something you live. It's not, oh, I've got a meeting next week, I better put my advisory hat on. It's something that you live and breathe. And some of that comes down to the communication in your firm, right? We're working with a lot of clients to produce articles on topical business themes. We're helping them to engage with their clients through surveys and questionnaires, which get their clients to actually do stuff and provide information. We're producing guides and ebooks and other things which enable clients to engage with their accountants and provide information, webinars, assessments, interviews, a whole bunch of things that you can do, because this is not just about your next meeting. It's about how you position your firm as an advisory firm, right? Now, we always like to make an offer in Panalitix for each of our webinars. We hope to do more business and more business with you. So I think we've got something that's quite special today. Please bear with me while I tell you about it, right? And what are the goals here? The goals are to help you develop this language of business, or this advisory framework that we've been discussing. By the way, there are multiple ways to do this. There are multiple angles we can come at this at, but today we've presented one such framework. But we feel that if we can build those frameworks in your business, you will be better equipped to help your clients with their strategic decision making. And that's what advisors do. They focus on the strategic decisions of their clients. And if you can do that, you will have a much easier time finding and proposing and closing advisory business with your clients, right? And if you do that, you'll figure out how to scale the business. You know, the advisory businesses that I was involved in grew from 1 or 2 people, I was a founder of each one, to 150 people in each case. So the idea there was that we could scale the advisory business by finding processes to enable other people to participate. And we also talked about how we market and position and present our businesses through our communications with confidence. So this is what we want to get to. And we've devised this advisory campaign, which is a 90-day structure. That's enough to get a lot done, but it's not too much that you're locked in forever on some journey which you're unclear about, right? So 90 days. Here's how it works. By the way, we're investing a lot of time in these, and we can only provide 5 of these to each of our markets: North America, Europe, and the Asia Pacific markets. Australasia is part of Asia Pacific, right? So there's 5 opportunities to participate in this. Here's how it works. So remember, it's 90 days only, but you'll interact with a Panalitix advisor. And what you will do is identify from your client base a target client or clients, right? This is not conceptual. This is not academic. This is not university. This is about finding a particular opportunity inside of your client base, right? And then assessing what we think their needs are. We might call that the advisory thesis. What is it that they might potentially buy, right? And then how do we figure out how to get in front of them, propose and close advisory business to meet that need that we've identified? And in the course of this, how do we enhance our credibility because we may need to deprogram some of these clients from thinking, oh yeah, you're the guy that bothers me each year to file my tax return. We need to graduate from that to you are a partner who can participate in some of the most important decision making that I'm going to be doing, right? So this is what you will do with a Panalitix advisor over this 90-day period. And you'll have access to a bunch of tools, right? Growth Equation, the planning tool supported by Learning Hub, the library, Marketing Hub, and Client Insights for enhanced communication, right? And then Sales Pipeline in case we want to manage our opportunities. Now, remember what I said at the beginning? This is not just about the tools. If I thought this was about the tools, we'd be having a very different discussion, but the tools help to create efficiencies. So that combined with the Panalitix advisor is really important. We'll help you set up and train on those tools so that they are adding value in your business. And remember, this is just for 90 days. But here's the thing, right? On a monthly basis, we're asking you to pay $150, right? For each month. That's a $450 investment in order to participate in this, right? A $450 investment to get that kind of interaction with a Panalitix advisor, access to those tools. There's no obligation to continue with us after this. Why would we do it for $150? I'll tell you why. Because we absolutely believe that the structures we've created and the philosophy that underpins this and the tools that we can offer work, and that you will want to work with us in the longer term. This is an investment in creating new client relationships, and we believe will add a lot of value in this period, right? Once again, I repeat, last night, I did this in Europe, and we had 3 UK firms, a Belgian firm, interestingly, our first Belgian firm, and a Swedish firm sign up for this. We have 5 opportunities. Please type marketing in the questions box if you would like to participate in this offer. I hope you do. Look, a final word on this. I think this is the right guy who said this. A crisis is a terrible thing to waste. If you feel we're in a crisis now, right, take the opportunities available to you to recalibrate your business and grow and be the best you can be, right? And if advisory forms a part of that, find your framework. I presented one today, which I hope can add a lot of value for you. And I'd love to be able to speak with you about it in the future. And I hope that you'll participate in the offer we made. Type marketing in the box if that's the case. We're coming to the end. I think we're going to publish one quick final survey, which we encourage you to participate in. But I'm going to say thank you very much for being with us this past hour. Thank you for supporting Panalitix. We have a lot of members. We appreciate your business. Please fill in the questionnaire, and I look forward to seeing you on the future webinar. Thank you very much, and goodbye.